Hello, and welcome to another episode of the Investor Financing Podcast. And on today's show, we're going to discuss a recent article I read. Nearly 1 in 5 U.S. homes bought by institutional investors in Q4 of 2021. And that's pretty amazing that the institutional buyers are buying so many properties. I have a lot of friends that are big wholesalers, and I know they're just selling a lot of their inventory to these institutional buyers. Some really interesting facts. So basically, with nearly 1 in 5 houses being scooped up by large owners, this was according to data from Redfin. In total, these large buyers acquired roughly 80,293 homes during the fourth quarter, worth approximately $50 billion, an increase from $35 billion they bought a year ago, the report shows. This is pretty amazing. Really interesting to read this article and just see how many properties are actually being purchased by these institutional buyers. Some of the most popular hotspots for these institutional buyers, it says here in Atlanta, 32.7% of all homes sold in the fourth quarter were bought by larger investors. The biggest share out of the 40 metro regions in the report, which was Atlanta. Wow. Followed by North Carolina, which was 32.1%. Low-priced homes remain popular for investors, making up 1/3 of all their purchases in the fourth quarter. That is very, very interesting. So this is a pretty interesting article. It was put out by commercialobserver.com. It also talks about Blackstone, Colony Capital, and American Homes for Rent. So you're seeing a huge influx. And I mean, this has been happening for several years now, but it seems like I'm kind of torn because it's these institutions have a lot of smart people working there. And you would think that the market is somewhat peaking, but I think the cost of money and the inflation is pushing these institutional buyers to purchase this asset class because we have such a shortage of housing. So it is very interesting times right now. And, from a perspective of a small investor, what can we do to get in the game against some of these big whales? But I think really these whales aren't buying the fixer-uppers. They're buying these turnkey properties, mostly with maybe very little rehab, paying above or retail price, which is crazy. So obviously, there is something there that they see that the market's going to keep going, and maybe that they can just lock in cheap long-term debt right now. And looking back, in 10 years from now, if you can get this cheap financing in the threes or wherever they're getting their funds from, even for the individual investor, that 10 years from now, we're going to be so happy that we refinanced everything and went into long-term 30-year fixed rates, because probably the rates are going to be substantially higher at that point.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again.
And so I know refinancing the primary house, pulling cash out, going into a 30-year fixed rate at 3% is a good option. I know rates have gone up slightly, but it's still relatively cheap. And I do think rates will trend up. So reading this article is pretty eye-opening about what's going on right now. So, I kind of feel bad for the first-time home buyers because they're the ones that are getting squeezed the most. So I'm kind of reevaluating what I can do to purchase more property and compete, right? Compete against these big institutional buyers. And I think there's always opportunity. So just figuring out how to navigate the markets. I know a lot of people, like I was saying earlier, in the wholesale space are just crushing it because they can just bring these properties and these institutions will pay more than the average investor. So it's just a win-win, and they close quickly and it's easy and yada, yada, yada. So very interesting times, February 2022, and this article came out. I'm going to link it in the show notes. Pretty interesting to read. What are your thoughts? Comment below on what you think about what's going on right now. Is this just crazy, or do they know something we don't know? Anyways, appreciate you watching, listening to the podcast. And we have a lot of great interviews scheduled. And I hope you're enjoying all the effort we're putting into putting out great content. All right. Have a great day.